Good morning, Oracles. Well, inflation came in high, a lot higher than expected. And as we had discussed, the stock market reacted accordingly and we went red. Now, what ended up happening after that, right after market opened, was we ended up going green. We turned the corner. I noticed in my portfolio, I was like, hey, we went from red and now I'm looking green. And we started to climb out of it. And that told me that a lot of the inflationary numbers and readings were priced into the market. It wasn't until later on in the day when Fed member Bullard had mentioned that he's like, we may have to go up 100 basis points. We might get to 1% in interest rates by June. And now Bullard is the most hawkish Fed member that is out there, but this comment had scared the market a little bit. And he had also mentioned how they might need an emergency meeting to raise rates sooner. And so because of this, the market then sold off. We went from going green to now in the red. And so that's where we're at now, is we're in the red. But is this going to be just another overreaction? Because the initial reaction we saw was, all right, we anticipated high inflation. We had this priced in, and now we're going to start rallying back. So do we see the rally continue today, or do we see this red continue? Well, we are seeing pre-market that we are starting in the red. But over the last couple of weeks, we've kind of flip-flopped. When we've been pre-market red, we've ended green. When we've been pre-market green, we ended red. So we'll see how today plays out. Obviously, nobody's going to know until the end of the day. So for me, I'm just going to sit here and see. What was nice to see about Tesla was that it held up at $900. So it didn't fall as much as it normally would have in this kind of broader market movement. And so it holding up at $900 was a great sign to show that that is a great support for it. However, we know, as we have discussed, there is a gap to fill down to 846. I was anticipating if we had gone with higher inflation yesterday and we went red, that we would fill that gap sooner rather than later. So I think that's what's going to play out right now is, do we fill the gap now or do we fill it in March? Personally, and this is not financial advice, I think we're going to fill it one of those two times. I do think we are getting back down to 846 to fill that gap. If we go lower, I don't know. Again, this doesn't have to happen. Gaps fill 9 out of 10 times, and we have filled the last 2 that we have discussed. So this just leads me to believe that, especially with inflation and interest rate turbulence going on in the macro environment, there is a good chance we will get back down there. And now with interest rates going up, this is a good thing. We have to remember that living with a 0% interest is not good for a healthy economy. So we need to get ourselves back to a 2% because having that 2% interest encourages a little bit of inflation, and a little bit of inflation year over year is a good thing. 7.5%, not a good thing, but a little inflation is good for the economy because it helps the economy continue to grow and entices people to spend a little bit more and not wait to buy something because the price may come down. So this is why it's good to have a little bit of inflation, and you need to have those interest rates being up around that 2% to keep everything balanced around that 2 to 3% for inflation. And now to switch gears, we're going to hop over the big pond to China, where they discussed that Beijing is going to be the home of the new Design and Production Center. Now, this is something that I'm going to stem back to a tweet that we had heard back in December from the president of Tesla China, discussing how they were looking forward to having China be the home and design center for a new vehicle all of its own, completely built and designed in China. They were also discussing it being the compact car. So could this design center in Beijing be what is going to create the $25,000 vehicle? We shall see. Sounds like this is probably where it's going to be coming from and starting. So we'll see how this plays out, but just putting a couple of pieces of the puzzle together leads me to believe that that's where we're going to see the $25,000 car coming from. And so back to the stock, we are seeing still a consolidation period that we're in. Again, I've been seeing it between 900 and 950, so we've kind of been balancing around 925. I have strong support levels for both, so we're kind of channeling right now, which is not a bad thing. Still extremely low volume compared to normal. So again, because of what was going on with the inflation, with the Fed meeting potentially raising interest rates in March, 1, maybe 2 rate hikes, we don't know. So it seems like there's a lot of big money sitting on the sidelines, just waiting to see what's going to happen. before they pull the trigger and dump more money in. And again, sideways trading and consolidation is healthy for the stock anyway. So yes, maybe some of you were in at a price over $1,000 and maybe you can't dollar cost average, but now would be a great time to dollar cost average. Again, I'm not a financial advisor, but I do think that we will see the price come down to fill that gap at 846 eventually. So again, timing the market's impossible. This is why I dollar cost average, but now is a great time to do that in the consolidation period while we're waiting for more answers and clarity coming out of the macro environment before we can continue climbing up. Again, I am confident that we're going to climb up because I look at the fundamentals of the company, and the fundamentals of the company are telling us that we have tremendous growth in front of us. We have a tremendous foundation to build off of. So there's nothing to tell me that we are going to be falling rather than climbing. Granted, in the short term, we may come down a little bit, but for those of us who are long-term investors, this is the time to dollar cost average because we're just building up this strong foundation to grow off of. Let me know in the comments below, what do you think they're going to be doing in the Beijing Design Center? Do you think that's where they're going to be creating that $25,000 car? Let me know. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.